Welcome to Tax Teach. I hope you're all having a great day. My name is Sean. I'm a certified public accountant specializing in taxation. Today, I want to talk about tax planning, what that is, and also the best time to tax plan. What tax planning basically is taking the tax facts that you have for the year and using those facts to create the best tax outcome for your situation, which usually is a lower tax liability. What I mean by facts, there's things like what kind of job you have during the year and how much money you make, what kind of retirement contributions you make. If you have children during the year, maybe you have some tax credits that might be available to you. There's if you own a business, there's income, expenses, and other items you might spend money on that you have to consider, selling stock and other assets. So all this kind of information can be used to your advantage using the tax code, and that's really what tax planning is. And when it comes to what time you should tax plan, a lot of people think March, April, February, right before the tax return is due. They'll go up to a tax advisor or a CPA and ask them, "How can I lower my taxes?" While a CPA or a tax advisor may be able to help you because they have a good understanding of the tax code, really the best time to tax plan is in the tax year. So for example, we're in 2021 in December. It's a perfect time to go to a CPA or tax advisor and ask them for help. Because right now you still have time to adjust your facts so that you have the best tax outcome come April 15th. I have a couple things I want to go over today that you should consider as the tax year comes to a close. So without further ado, I'll go over some tax planning strategies that might help your situation. The first thing I want to go over is making charitable deductions. Now, as the year comes to a close, you might be feeling charitable and wanting to donate to several organizations. This might help lower your tax liability because a charitable deduction can lower your taxable income. If you don't choose to itemize your deductions, you can take a $600 deduction from your adjusted gross income. Another thing to keep in mind is if you are itemizing for the year, you may be able to take up to 100% of your AGI when it comes to a charitable deduction. What that means is you're able to take a larger deduction than prior years where you can approximately do around 60% of your adjusted gross income. Things to consider this tax year if you're feeling charitable and wanting to give to organizations is that you can help lower your income that you have to pay taxes on and feel good about doing that. A second strategy to think about is whether or not to sell some assets that have a loss. In a tax year, you may be able to take up to $3,000 in losses that can go against your ordinary income. And this is something you should consider. For example, maybe you have a couple stocks you want to sell that haven't been performing the way you want them to, and they're at a loss. You can, sell a certain amount of stocks where you get $3,000 in losses and deduct that against your income you make through your job or your business. Just something to consider as the tax year comes to a close. If you have an asset that's not performing the way you want it to and you want to sell it off, maybe consider that. A third thing to consider in tax planning is contributing to your retirement accounts, whether that be a Roth IRA or a traditional IRA or a variety of different other accounts. As the year is coming to an end, you want to make sure you max out these accounts if it helps your tax planning now and in the future. I have a video going over what a Roth IRA is, and there should be a bubble popping up now where you can click the link and look up what that is. Also, with a traditional IRA, if you contribute to that account, you remove that money from your taxable income. So if you're funding your traditional IRA, you're able to lower your taxable income to a certain extent. There are limits that apply. So in summary, be cognizant of your contributions to your retirement accounts. This benefits both the current tax year and in the future when you'll have to withdraw from those retirement accounts during retirement. A fourth thing to consider, and this relates to businesses, is whether or not to deduct assets that you buy in the tax year. Code section 179 allows you to fully deduct some assets. So this is a powerful tax planning tool if you're in 2021 and maybe you made a bunch of income this year and you want to lower your tax liability, you may be able to fully deduct some assets that you put in place or bought in that year. Something to keep in mind if you're trying to tax plan for this year and look into the future years. You never know, there might be an increase in tax rates in the future, so maybe you don't want to fully deduct your assets. I always recommend talking to possibly a tax professional, whether it be a tax advisor or CPA, on whether or not to do these kind of tax planning strategies. In conclusion, I hope you found me talking about these tax planning strategies helpful and they help you get in the right mindset for your tax planning as the year comes to a close. Things to consider is donating to charity and getting that deduction. There is contributing to your retirement accounts. They'll help you now and in the future. There's, taking up to $3,000 in losses, deducting certain business assets. This is a start to tax planning. There's other strategies as well. I always recommend talking to a tax advisor or CPA if you're curious about what tax planning strategies might work for you. And one thing to keep in mind, tax planning is important, but it shouldn't be the main focus of your business. Your business model should always be your focus, and just having the tax planning in the back of your mind is helpful. It might help you create a competitive advantage, lowering your tax liability. Thank you all for watching the video. Hopefully you found this video helpful and informative. If you like the video, hit the like button. It lets me know that I'm creating good videos for you all. And yeah, thank you for watching the video, and I'll see you next video.